ELI5. Why are there so many fintech startups when they all seem to do the exact same thing? Sure, it could be a better user experience if every fintech consolidated into a single company. However, every company wants to be that one company winner. Hence, many companies spring up doing similar things, and until one company dominates every facet of the market, there will always be room for new competitors to take a piece of the pie. And sure, a fragmented market means more apps and a less coherent user experience, but it also drives prices down, which is good for users. This is basically just capitalism. It's not necessarily unique to fintechs. Venture capitalists have to invest in something. The people giving them money are expecting a return on investment that is greater than what they could get from safer investments like the stock market, bonds, etc. There is an unfathomable amount of money in venture capital, and they all want to invest it. This causes tons of startups that are doing the same thing to be invested in. It is slowing down now, but back in the low interest rate era you could pretty much raise your hand and get a seed round for a startup. Source: worked at a tech startup. In oversimplified terms, there is a lot of money around. Investors want huge exits. Investors don't want to take too many risks in this economy. There is a limited number of opportunities that seem safe and huge enough. So, everybody is doing the same thing. It is like the car industry now. Everybody is making boring appliances because that is what sells the most, but there are smaller but perfectly good markets right now that are way less competitive and up for grab. I could also say the same about Hollywood. Enough with superheroes. Why are there so many banks when they all do the same thing? Financial services are a staggeringly huge market, and fintech has only captured a small amount of the global banking market. They are all trying to grab a piece of that pie, and hopefully grab as much market share as possible, and then consolidate the other ones through mergers and acquisitions, or to get acquired themselves, by PayPal. Here, every day I see yet another utterly generic fintech company raise tens of millions of dollars in a funding round to do what every other app does. Answer to yourself right there. The real question ought to be, why do VCs keep shoveling money at the same unoriginal idea? In which case the answer is they're gambling on this particular con man being good enough at grifting to keep the company alive until an IPO. It's really no different than there being a bank or a drugstore on each corner. They all offer similar services, but they differentiate via marketing and branding. I don't think it's nearly as capital intensive to white label a bank through your fintech app than it is to build thousands of branches in real life. TLDR: there is a very low barrier to entry and a whole lot of unbanked people. Basically every new financial space needs a new fintech. Different countries, cultures, ages, businesses, and governments all need different fintech. The possible combinations are endless, and as things change it gets even more complicated. I know we all want a super simple system that's cheap, easy to use, and works everywhere, but as a capitalist once said, where's the money in that? Assuming the premise of the question is true, I think it is because fintech companies tend to be started by people with insights and connections to funding. If you have connections to venture funds and investors, then you're likely to have experience in finance. If your experience is in finance, then your startup ideas are likely to be finance related. It's basically same as crypto. A few have a good idea, many jump on the wagon, and it basically comes down to whose shit sticks to the wall and then become the first movers and will generally keep dominance in the market. Despite what tech guys like to see themselves as unique thinking individuals, they don't really want to stand out with something so different from others. They just do variations of the same thing because it's a safe bet. Capitalism is just broken. It's not about rationally what's best for the market, it's about hype and copying what came before to get investments, to add to what the other people said: easy funding. Since fintech has the potential to scale huge, some investors love to throw money at it, cause they don't actually offer anything. They're all just trying to scam investors with buzzwords like peer-to-peer and digital wallet.